Welcome to the Pump and Dump channel for another video, this time doing another transaction in the theoretical model portfolio. As you can see here, the decision is to sell Noble Energy and to buy Range Resources. Here the decision is guided by number one, Noble Energy being converted into Chevron shares. I don't know exactly what Chevron is worth. I have not done the analysis and I think it's unlikely I'm going to work my way through it at this point in time to get an understanding of what a correct valuation for Chevron should be. The decision here to buy Range Resources, as you can see, is opportunity. I'll get into some charts too at some point in time in this video, but as you can see here, I have the current price of 746 and 995 here for these two stocks, and with 746 for Range Resources, it gives me about a 57% upside based upon the share price now and the target valuation I have for it as it stands right now. So this is kind of looking at trying to build the upside in the portfolio, buying something for less than it's worth and then waiting for the market to recognize that. Of course, there's no guarantee it will happen, but it is the way it is. So let's do it here, get the shares away, and then we'll just we'll add in this amount here, and that will give us the result of a small profit, which, as you can see, is kind of logical because I bought it here and I sold it here for a little loss of 4 cents, but previously I sold it here after buying it up here, so that kind of is where the profit comes from. Then for the shares of Range Resources, as you can see, it's just taking the amount divided by the current price, and then for the amount here, adjusting it for this amount, and then we get to the same profit and loss and same percentage. So nothing has changed here apart from the composition of the portfolio, so it's clear that it's not me fiddling around with the numbers. So getting into the chart as mentioned, so this is the chart for Range Resources. As you can see, there is this clear trend line here. We are falling towards the lower band here. Why are we falling here even though oil, natural gas and natural gas liquids have remained very positive and strong? It's most likely I would say investors or traders, whatever they are, who bought previously, and I mentioned this before that there was this target as we were going into the highs here of about 935. Well, let's see what it actually gives as a high. 937. I had mentioned a target of 935 and it kind of got to it and it started selling off because I assumed that the people who had that same target as me, they were selling there, and eventually after they sold, there was no buying pressure, and then other people started seeing it go down and they start selling because they see a price going down and they don't want to lose money, so they sell. And then we get to this lower band here, and then we probably get some support here, and we'll probably pop up here, maybe above, and pull back and get into a new up move, or maybe we'll just push up here and then just drag along this line, who really knows. But getting into that 935, of course, it's not the same target I have mentioned here or here. It is, as I've explained several times, it is a valuation that is using natural gas liquids prices as a derivative from WTI prices based upon discount to WTI, rather than using the prevailing natural gas liquids prices and the management guidance that they have given. And that kind of gets to a 935, and yeah, with the current situation where oil, natural gas and natural gas liquids stand, I would put it as I mentioned here at 1172 fair value, but using oil instead of natural gas liquids pricing, it would come down to about 995 or so. So it still has the upside here, but this is how the market works. At least that's what I've experienced. The market sees a target, and when it's reached, they sell, and then it sells off, and if the opportunity is there, they'll buy, and then they'll buy it again towards the target. So that's kind of my expectation. There is of course a risk that we do fall to maybe $6 a share, and I would think that would be about it would be around half of what I have as a fair value, and I think there the buying would certainly kick in, but there's of course no guarantee that that will happen, but I think it is very likely it would happen if it did fall down here. But for me, I think this is where we hold and where we start pushing up again. So that's kind of going to do it for this video. I'm not going to get into more detail about other things. I will also add here that for Diamondback I made a slight error in calculation when I was coming up with these targets. I noticed that recently that I had instead of having my formulas linked to my main sheet, I had somehow overwritten something and it gave me it gave me an error. So the actual updated target is 46 here. This is it is the way it is. It's a mistake I made, and I obviously paid, I paid a fair price at that point in time, but it's, it's obviously it's not it's not reflective of where the stock price is now, and it's not got the upside as I had anticipated. So that was a kind of a mistake I made here. It happens, but as you see, like other producers are trading at a discount, so why would that not trade at a discount too? So this is kind of where it stands for this video. I'm going to leave it with that. Remember, as always, it's not investment advice or recommendations to buy or not to buy. If you have any questions, comments, opinions, leave them in the comments section. If you like the content, don't forget to subscribe, and have a good day.